Hi guys, welcome back to the Market Monitor. Let's start by doing our Q&A session today. So, as you all know, I had put in a form a couple of days ago, and we've had some responses filled in. So I thought that I would just do a Q&A. I've not taken all the questions. I've taken the ones that I feel were the best for this particular video, and it would help me really figure out exactly, it'll help me send the exact messaging that I want to send to you guys and the kind of thoughts that I feel like you should start having if you're really serious about swing trading. Now, the first question is that do you maintain a separate thinking journal apart from your trade journal where you record market observations, hypothesis, sector rotation notes, and ideas that may not result in immediate trades? So, all of the journals that I include are the following. My first journal is my handwritten journal. In this handwritten journal, all that I do is talk about the daily action. I've made a video on this on Instagram as well. So, it's the daily action in the market. It is followed by my holdings, then it is followed by the journal side of things, so like the emotions, and then that is followed by the watch list, exactly what I plan on doing in the next day. Then I have a terminal which I have coded for myself and created, and this terminal is nothing but a Notion template. Lol. So on this Notion, basically it has everything of mine, right from my starting journey to what it is today. And over here I track my trades, right? I track trades and all numerics are stored over here. So these are the two journals that I hold. I don't have any thinking journal as such. All of my thoughts come in here in this aspect of my journal, and yeah, that's it. I don't really hold like all of these sector rotation notes and all they all come in my handwritten journal. This is where I really like to focus and write down all of my ideas and feelings and thoughts. All right. While taking entry in IPO-based stocks, what should be the moving average interval, 1 hour or 1 day? Now, I'm a very basic swing trader. Firstly, I would like for you guys to understand that I'm a swing trader, right? Now, as a swing trader, my goal is simple. All that I want to do is follow rules, right? So, all that I do, as I said, is I follow rules. Now, for me to follow rules, I need to have my entry, my exit, and my criteria to classify the stocks spot on. That's all that I need. Now, to answer your question in depth, the moving average interval for me, all of this doesn't really matter. All that I look at for my execution is the daily time frame. All that I look at in terms of understanding the bigger trend is the weekly time frame. And all that I look at in terms of seeing what's happening during the day is the 5 minute time frame. This does not include any execution for me. I do not look to execute off of the daily, off of the 5 minute time frame, or I don't even look to execute off of the weekly time frame. All that I execute from is the daily time frame. All right. So that means that my moving average interval is always for the day. I don't look at the hourly chart and things like that. These are things that you can do, especially for IPO basis. It's also mentioned in the IPO masterclass, but I don't personally do that. I prefer to have it simple and easy. All right. How to use RS lines in charts effectively as top traders use it for better trading. Now, an RS line is basically relative strength, right? So that is what this gentleman here is talking about. And relative strength is nothing but understanding what is the stock doing, right? What is the stock doing versus the index or versus the general market. Now, I don't use an RS line because I find that it clutters my chart space. And I don't want any cluttering to take place. However, if you would like to use it, you can. I have seen traders who try to buy stocks which are only 85 plus RS rating. I have seen traders that try to buy stocks that are only 90 plus RS rating. I, for one, do not necessarily believe in it, and I don't even like the indicator. It's not needed for my style of trading. I know Mark Minervini uses it, for example, but again, everyone has their own style. I don't really see the need for RS, a sort of indicator, the RS line. I feel like just by looking at the index versus the stock, I get enough idea about what is happening. All right. But that is how you can use it. You can use it and look for numbers like 85 plus or 90 plus. That's what I would do. All right. The next question is, which mistake still appears in your journal occasionally, even after years of experience? My number one mistake last year in 2025 was noise. I fixed this by deleting Twitter. which I have now started again because I want to grow a following, which is of good avid swing traders. Because now noise doesn't affect me anymore. I have everything set. The actual reason over here was I didn't have rules. Without rules, you can't do anything. So that was the number one thing. But now in 2026, so far in this financial year, it was pivots in terms of buying tightness next to the 10-day, right? So if I looked at my mistake tracker, these were the biggest mistakes that I was making. So I have fixed this as well. I have made that indicator, which is the winning edge indicator, and it is right on my chart. So every time I'm staring at the fact that pivot at 10. If I don't see this, then I can't buy that stock. So pivots was my biggest weakness so far this year, but I've tried to fix that as well, and let's see how that goes. All right. How does your watch list evolve throughout the week? More importantly, what makes a stock leave your watch list before it even becomes a trade? So I have a simple watch list management system. It is like a filter. So imagine it like this. All right. This part is my screener. This part is my secondary watch list. And this part is my primary watch list. Now, my screener, I screen daily. I screen 250 to 300 names on a daily basis. Simple. My secondary watch list includes the best names from the top sectors. So, sector plus top names. And my primary watch list is basically actionable stocks that I'm planning on buying, nothing else. I want no noise in my primary watch list. What makes a stock leave your watch list before it becomes a trade? Abnormal action. I hate abnormal action, right? Outside days, big reversals. I don't like these things. But I will still keep them in my watch list. I don't necessarily remove until the weekly scanning is done. At what point did chart readings stop feeling like memorizing patterns and start feeling like understanding market behavior? What changed? All right. So there are a couple of key points that actually shifted everything for me. Number one was realizing that charts are a effect of supply and demand, not the cause of it. Right? This is a very famous line by Mark Minervini. It basically says that you don't need to look at patterns. You need to understand supply and demand. What is causing a stock to go up? What is causing a stock to go down? What is causing a stock to go up and to go down? And then to tighten and tighten and tighten and tighten till the time we get a pivot point and then we break out. What are these factors, right? Why is there such big volume here? And then suddenly in the base, the volume goes away. You get that one big buying volume in the base, then the volume goes away, and then you get a huge buying volume and the price goes up. When I started actually understanding supply and demand instead of saying that, oh wow, high tide flag, oh wow, VCP, right? Location of these things matter as well. People just look at the last 20 candles or the last 20 bars and then make up an opinion of that, but that is wrong. Y'all can't you like just have to stop doing that. Always, I there's a quote which is, when in doubt zoom out, right? I always love to do that. Charts are not charts are an effect of supply and demand and not the cause of supply and demand. Understand that charts are only sort of an opinion that is projected, right? Not an opinion, sorry, it's the price action projected on a time frame. But what is causing price action? Supply and demand. So that has to be understood in a very deep manner. All right. Other than that, another thing that really, changed the opinion for me is the fact that I'll just delete these drawings here. Not that image. Is the fact that when I understood the importance of just a second. It is when I understood the importance of repetition. All right. So looking at winners changed everything for me. Looking at my mistakes, I've sat down and gone through every mistake I've made since I started trading. These two things changed everything for me. You have to collect data. Have to collect data. It's a must in trading, right? Without data, it'll be tough to actually understand your edge. So you have to collect data. And then the bear market. The bear market changed everything for me because I got so much time to sit out and actually focus on what matters, which is my rules, right? My rules really matter, which is my risk management and aggressiveness when you get the bull market. These are the three things that I've really figured out. All right. How do you define a perfect trade? Is it a profitable trade or a trade where every decision followed your process regardless of the outcome? Well, it is definitely the second one. I feel like a successful trade is a trade where you follow all your rules and you can go out of that trade saying, I'm proud of how I managed my trade and that I think that I managed it to perfection and I could not have done anything different regardless of the outcome. A good example, members who are with us since, March, April will know Fractal. Fantastic trade. What happened in Fractal? I can show it to you actually. Right. So I took an entry in Fractal on this day, right, which was what, the 13th of April. So I took an entry in Fractal. Next day, stock goes up, becomes risk free for me. My stop loss was 3%. Stock went up 4.94. No, sorry, not risk free yet. On this day, it becomes risk free for me, if I'm not wrong. 3%, stock is up 6.3%. Yeah. This day, stock becomes risk free, right? And then this date is confirmed risk free. Then comes down because it's risk free, stop is at break even, cuts my stop loss by a total of 0.41%. It went below, and then look at the move that came. So from my buy point, stock went up 32%. I got stopped out at break even. This is a trade where I did not feel anything. I did not feel like I did anything wrong. I did not feel like I could have done anything different. The reason was I followed my rules. My rules are the biggest thing that's my edge as a trader. If I don't follow my rules, I'm no one as a trader because the market is supreme. People do not realize this. They think that they can do whatever they want. That's not true. The faster you realize that best the best stock market player that India has produced, Rakesh Jhunjhunwala, says that the market is supreme and that you cannot beat it. The faster you'll realize that if you want to reach even a fraction of what he achieved in his lifetime, you have to follow the same principles. So that is something. Okay. A quick ones because these ones did not come into the form. How to mark a stop loss in case of IPO basis. So for that, it's simple. It's either a fixed stop because sometimes IPO bases are big. So fixed stop at 4% or previous day low. Okay, that's simple. How to find the 10-day indicator, guys? These things are these. This question can be Googled as well. It's just the indicator tab in TradingView. It's pretty simple, right? Just go to the indicator tab and you can search multiple EMA and get all the EMAs. How do I see the 50-day average volume? This one is actually, if you have a look, so this particular one is in the files section of the Market Monitor main group chat. Over there, there's a thing called indicators and screeners. You can use that. You'll get this 50-day average volume indicator there. When to enter a stock? Again, this is IPO masterclass. So y'all can watch this. It has everything that it needs. There are 5 entries, which I classify as short, up, short, flat, and short down, right? So these are the 3 short bases, which is like short up is like this, short flat is like this, and short down is like this. And then there is long VCP and long flag. Long flag is like this, and long VCP is like this, right? So watch the IPO masterclass. It has it with examples. How to identify a pivot? Again, masterclass number 1 or number 2. Both. I think it's the one with which is the VCP. VCP masterclass has explained this properly. What a pivot point is, how to identify it, where to invest money when we are out of the market. There are a couple of options. One is cash. One is just liquid bees. Liquid bees is a good place, right? One is IPOs. IPOs are constantly coming in, so you can look at that. Then there is FDs. I know people who make FDs as well. But these first, honestly, all of these can be done. Like in the last bear market, I was on cash fully. But if I had to look back at, like, it's probably good to, if you're in a bear market, put half of your money in an FD, flexible one, or a bond. Right? A bond is also decent. So these are some good options, risk free, no issues at all. So that's pretty chill over there. You don't really need to worry about, the downside because it's basically risk free. But again, do your investment advice and your research before you make any decision. but these are the ones that I usually tend to follow. And yeah, that's it for today's Q&A session. Thank you so much. Let me know if you all want to do another Q&A, whether we should do Q&A number 2. If you all have found this helpful, then I think we can go ahead and do it. It was pretty nice, pretty chill. Lots of questions came in. I would like for you guys to also, next time ask more questions which are more so learning focused. I feel like we can do a lot more learning focused questions, but this time was fantastic. Like, some of these questions were very good. So I liked them. Thank you so much. Would love to have more of these in the future, and let me know if you guys would like them. And I will see you guys in the next one. The market monitor will come on the weekend. Like always, we'll do a weekend review and we'll look at what to do. The previous trading week was a no trade week for me. So I sat out in that entire week. And yeah, it was nice. It was nice to, just be out of the market when the markets are not really doing anything great. And that's it for today's video. Thank you so much for seeing me, and I will see you guys in the next one. Take care. Bye bye.